Hello, everybody. Hope everybody's doing well. Let me just make sure I'm in the right groups because I always worry that I am live in the wrong place. Far too many groups. Okay, do I see myself? There I am. Good, I am. Hi guys, Jamie here. Hope everybody's doing well. It is Wednesday, February 3rd. February 3rd today. I am live right now on my Facebook group, Financial Literacy for Women Business Owners. If you're not a member of it, come join us, jamietrall.com/group. We are an inclusive group, so men are allowed to join as well. Also, tell me you're here so that I can make sure that this is working and you can hear me. Also, I'm live on my YouTube channel. If you're watching me over on YouTube, make sure to subscribe so that you don't miss any of the good stuff. So today we're going to be talking about the Employee Retention Tax Credit. This is big, you guys. And I've been mentioning it and telling you to keep it on your radar screen. There's still some things that we don't fully know, but we know a lot. And it is complicated. So I'm going to preface it with that. It is a little complicated. So hi, Autumn. Hi, Mark. Hi, Stacy. I'm glad to see you guys here. And this one, just to hit you at the top of the hour while we have people joining, this is for employers. Okay. So if you are not an employer, if you don't have any W-2 employees, then this is not going to be best for you. But if you are an employer and you have employees, this is going to be a great live for you. I want you to stick with me. And I know we're taking a little bit to get to the point, but I'm just letting everybody join because this is one where I don't want to start and have people joining. This can get you up to $19,000 in tax credit, payroll tax credits, i.e. that's actual money back to you. That's not a deduction. You don't get that's a full on straight up $19,000 per employee in your business. That's the max that you can get between 2020 and 2021. The reason that we did not talk much about this last year was because of the fact that the credit was a little smaller last year. The 2021 available is actually more and it's open to more people. And also, if you got PPP previously, you could not get what I call ERTC. So that's the Employee Retention Tax Credit. You might also see it just called ERTC, Employee Retention Credit, but it's the same thing. And so we didn't talk about it a ton last year. I had a couple of posts and things like that about it for people who didn't take PPP. But for the most part, since most of you guys got your hands on that PPP loan, that was better for you. Well, now you can get both, you guys. So that bill that was signed on December 27th of last year, one of the grand things it included was to say, actually, our bad. We're going to let people who got PPP also get the ERTC. Okay, so this is big. This is really, really big. So I'm going to jump in to a spreadsheet that I created for you guys. And normally, I normally don't charge for these. I'm charging a whopping $7 for this thing, you guys. And like I said, tax credits up to $19,000 per employee. I think it might be worth the $7. So I thought I would do that just to recoup some of the cost of like actually the education and things like that I'm doing. But I wanted to make it super duper affordable so that it's like, obviously I'm going to get this thing. And then I put a bunch of stuff in here. So you'll see what it is. You can go grab yours now. It's jamietrall.com/ERTC. If you want to follow along, it'll email it to you. So if you want to follow along, just make sure that you grab it. You're sweet, Autumn. I feel like I still feel good at $7. I feel like it's worth quite a bit more than that. Because this is a complicated topic, you guys, and I'll be truthful. I put off learning a lot about this topic for a while because it is a hard topic to explain to a Facebook group. So I knew a lot of the basics, but diving into the details and figure out how to teach this in a way that is appropriate to teach in this kind of a setting is hard. So I am going to show you guys some of the things that are in this. And again, if you go ahead and grab yours, it'll send you an email. You can follow along yourself. It might take a few minutes to get to you through the cyber world. But here is where it is going to be. So there's several different tabs here you'll see. So we're going to get to some of the calculation, but first I want to talk about who's eligible because that is important. And you also, this will help you calculate whether you're eligible as well. But I'm just going to talk through, I don't know how hard this is to see. I made these little decision trees because for me, these are really helpful graphically to figure out who the heck this applies to. So anybody else love a good decision tree? I don't know. It's like my favorite thing in the world. So we're going to start with 2020. And 2020 and 2021 have different rules, y'all. Just to make this super fun and exciting, they have very different rules for who can get it. So I have 2 different tabs for 2020 eligibility and 2021. And remember, this is retroactive. You can go back and claim this now. We'll talk a little bit later on about how to actually claim this credit. Okay, so first we're going to start. Do you have 500 or fewer employees? If not, sorry. You can probably leave this live. If you have more than 500 employees, and they do have aggregation rules, they do treat multiple different locations and things like that, and businesses that are co-owned as kind of the same business. So you'll want to look into the rules if that's you. But if you know, oh yeah, I've got more than 500 employees, sorry, I'll see you later. You're not going to be eligible in 2020 or 2021, unfortunately. So continuing to go through 2020, were gross receipts, and I apologize because a lot of this wording is straight from the guide and it's awful. So I'm going to try to explain exactly what this means. Were gross receipts for at least one quarter in 2020 less than 50% of gross receipts for the same quarter in 2019? So what does that mean? That means, did your gross receipts, so this is the total money that came into your business, kind of similar to the number that they're using to determine that PPP 25% dip, right? For the second round. It's kind of a similar thing. So we're gross receipts for at least one quarter in 2020, less than 50% of gross receipts for the same quarter of 2019. So did you dive down by more than half in any quarter? So in 2020, you could start, you technically can start in Q1 of 2020, although you're only eligible for a tax credit for starting around March 13th forward. So that's like 2 weeks. So for most people, Q1's probably out. It's probably going to be Q2 when you were closed down. You probably saw that big decline, right? So let's say Q2 2020 versus Q2 2019, where gross receipts, top line revenue collected from clients, right? Were they down by 50% or more? If yes, right? Awesome. We're going to go to this green box. Okay. Now, before I even get here, so if yes, you will qualify in some form or fashion. If the answer is no, I'm going to walk through that one first. If the answer is actually no, we weren't down more than 50% in any quarter, you can go to, was the business fully or partially suspended by a government authority during any calendar quarter of 2020? Probably, right? A lot of your businesses, unless you can do them fully from home, a lot of businesses had to close. They were ordered to close. So if that was you, okay. If it's not you, then you're not eligible. Sorry. If it's you, even though you weren't down 50%, you may still be eligible. It's going to be a much smaller amount though. So if you were not down more than 50% in gross receipts for any quarter, 2020 versus 2019, same quarter, but you were shut down for a portion of the year. During the time you were shut down, if you paid wages to employees who were not working, those wages are eligible for ERTC. Those are considered qualified wages for ERTC, but only if you were paying them for not working during a time your business was shut down. Okay. Now, if you paid them with PPP, then that's got to be subtracted out. So you're probably not going to get much of ERTC. ERTC is really best for people that fit this category of having a 50% decline or more for 2020. It changes in 2021 though, so hang with me. If you're still struggling in 2021, even if you don't meet the requirements in 2020, you might in 2021. So I'll get to that here in just a minute. And like I said, I'm just going to mention to you guys, jamietrell.com/ERTC. That's where you can grab your copy of this whole spreadsheet for $7 so you can really look at it yourself. Okay, so then we're going to come here. So let's say, yes, actually we were down more than 50%. We were down more than 50% in Q2, maybe even another quarter. So what's going to happen then, and this is going to be easier to see when we get to this gross receipts tab where you can actually calculate it out. But basically, qualified wages paid in the quarter that you were down 50%, and future quarter wages. And so if you qualify in one quarter, you can qualify in future wages as well, even if you're not down the full 50%. So essentially what this is going to say is you can take that quarter. If you qualify in Q2, let's say Q3, you were down, 40%, not a full 50%. You were down about 40%. You can still take it. So until you get back to 80% or greater of your gross receipts, that means a 20% decline. It gets a little confusing to go back and forth between those numbers, right? But saying, as long as your gross receipts, once they get up to 80% of what they were in the comparative quarter. So if by Q2, you were back to 80% of by Q3, if we qualified in Q2, but by Q3, you were back over 80%. Maybe you were back to 90% of what you had done in Q3 of 2019. You still qualify for that quarter because it goes till the end of that quarter, but you won't qualify in Q4. So it ends right after, like, the first quarter that you're back to above 80% still qualifies, but after that, you don't qualify anymore. Hopefully that makes some sense. Again, it's much easier to see if you're looking at this specifically, and I'm going to show you, I have a calculator in here that's actually going to calculate all that out for you. So if that's confusing, it's totally fine. You'll be able to put in your gross receipts for each quarter of 2019, 2020, and 2021, and this is going to tell you exactly which quarters you qualify for. That's why it's worth $7, y'all. At least. Okay. So let's say, so in this case, we're like, okay, yay, we qualify for one or more quarters in 2020. What does that mean? So is there another step? Yes. So the next question is, were average 2019 full-time employees greater than 100? So this is another point. You can qualify for the credit, right? If you had 500 or fewer employees. But then we have to ask another question around, were average 2019 full-time employees, and this is just full-time employees. This is not full-time equivalent. This is full-time employees is my understanding. So, and weirdly, because we just like to have a various different definition, instead of it being the 40 hours, which is how we calculate it for PPP, it's 30 hours. So how many employees do you have working 30 hours or more? What's the average full-time employees you have in 2019? If they were under 100, that's great. That means that all the wages you paid to employers, whether they were working or not working, are eligible to be counted as wages for ERTC. So, and again, we have a whole tab that calculates out what those qualified wages are. But the good thing is that if you have under 100 employees, it doesn't matter whether you paid them for working or not working. They count towards the calculation. Okay. Now, if you have over 100 average 2019 full-time employees, then the next question is, were employees furloughed with pay? So we go back to kind of the same thing we talked about over here. Were they furloughed with pay? Did you pay them for not working at some point in time during the year? If no, you guys, I'm missing a no. Well, this is obviously the no. Then no wages are eligible for ERTC in 2020. So if you have over 100 employees and you didn't pay them for not working, you don't get the credit. But if you have over 100 employees and you paid them while they were not working, you can get the credit, but only for wages paid to employees while they were not working are eligible. Okay, so this is confusing. Right? So this is confusing. So Doug, this is a good question. So we have a couple different numbers in 2020. That's why the confusion. In total, you can potentially get some credit if you have over 500 employees. Okay. But it may be but the only credit if you're over 100 employees, right? Then you actually can only get a credit for the wages paid while you were shut down. So that's the difference. If you have under 100, all those wages that you paid, even though your people were working, all counts towards the calculation. So that's where your credit is typically going to be bigger on a per employee basis if you have under 100 employees. So that's the difference with the 500 versus 100. It does get confusing, but then of course they change it in 2021. So I know that, so this will not include PPP. So your gross receipts won't include PPP. It may include other state and county grants, however, because typically those are taxable income. So I would expect that it would include that. It won't include EIDL, advance, or loan because loans don't count at all. And it won't include any unemployment because that should be outside of your business. So when you're calculating out gross receipts, and I do kind of talk through what is included, when you're calculating out gross receipts, it's money that came in from customers and then maybe some of those state and local grants that you might have received for your business. This is why, you guys, I've avoided going into depth. So if you just totally were like, I lost you entirely, I don't blame you. I had to literally read through this like 15 times as I had to create this so that I made sure I understood what was going on. So you're not the only one at all. Let's see. All your employees are part-time, less than 10. Yes. So the cutoff of the 100 employees or not, you can use this for part-time employees. Okay. So part-time employees count just the same as far as being able to get the credit for part-time employees, is my understanding. However, when you're talking about whether you have more than 100, you would be clearly under 100 full-time employees. If you have 0 full-time employees, that's under 100. But you can still claim the tax credit for those part-time employees as well. Let's see. Let's see. Yes. So wages, let's talk about what qualifies as wages. So I have some discussion in here around what qualifies as wages. So when you get to that point where you're figuring out wages, it's wages and compensation paid to employees and subject to FICA taxes. Okay. Plus qualify, which is pretty much all wages, but wages and compensation. So that can also be variable pay, commissions, things like that. That should also be subject to FICA, plus qualified health plan expenses. That is what is included as qualified wages. And then I mentioned here again about the under 100, over 100 situation. And then what a full-time employee is, it's anyone over 30 hours per week or 130 hours per month. But again, and this is important. It says don't include part-time employees. That means in the determination of whether you have over 100 employees or not, but you still can include them in the calculation of qualified wages. Hopefully that makes sense. Okay, so that's 2020. Good. I'm glad Jackie got it. I just need to do this for my own sanity. So hopefully you guys find it useful. Let's talk. Should we talk about 2021? Do we want to talk about 2020? 2021? Okay, wait, really quick though, before we go to 2021, let's talk about the fact that over on this gross receipts tab, when you calculate this out, okay, you are going to put in, let's do like a quick comparison for 2020. So you're going to say, okay, in Q1, again, Q1's not likely to be the one. You probably weren't overly affected in Q1, so maybe you went down a little bit, but you probably don't really qualify. Let's say in Q2 though, that's when what hit the fan, and your typical Q2 is like really strong. Normally you have like 15,000 in Q2, and instead you made 7,000. Okay, so you were down 53% versus previous. So now you can see it automatically has said Q2 and Q3 are qualifying quarters. Why Q3? Well, because until the quarter after you get back to 80%, even if you got back to 80% next quarter, it would still count because it's the quarter after that stops counting. So for example, in this case, let's say your Q3 is usually 14,000 and this year you made 9,000. Now you're down 35% still. So now it's saying, oh, Q4, because we're still not back to that, being back to 80%, i.e. a 20% or less decline, right? Then we are, then we're going to be in a situation where, okay, now Q4 also qualifies regardless of what happened here. So let's put in and say, okay, Q4 is not usually a big quarter. And maybe by Q4, we were doing a lot better. We were back to, about 90% of where we were, 10% decline. Still a qualifying quarter, if that makes sense. Now, the rules change in 2021. So that's why it kind of stops here, right? The rules do change in 2021. So we'll do 2021 separately, but essentially you figured that out. Now, let's say in Q3, just to give some examples here, in Q3, you actually got, pretty much back to normal. Well, now only Q2 and Q3 count because Q4 is the quarter after you were kind of back to that 80% level. So again, this is going to calculate it all out for you. All you have to do is put in your gross receipts numbers, right? And what is the credit? So that's also important. Then you're going to come over to 2020 and you're going to be able to put in all the different numbers, essentially the amounts that you paid to your employees for those quarters. So you're just going to go with, okay, it's only Q2 and Q3 that apply. So don't fill in Q1 or Q4, just fill in Q2 and Q3 when you're doing this spreadsheet, because it's pointless to do Q3 and Q4 because they aren't qualifying. But in this case, employee one, let's say I paid them $4,000 in Q2 and I paid them $6,000 in Q3. Well, essentially it maxes out at $10,000. And then the tax credit is 50% in 2020. Again, it changes in 2021. But for the full year, the max tax credit you can get per employee is $5,000. But if we didn't pay, let's say we only paid, $4,000 in Q3. Well, now we're down to 4 because it's 50% of total qualifying wages. If total qualifying wages was 8,000, it maxes at 4%. Now, let's say this is a really highly paid person, right? We paid them a bunch of money. It still maxes out at 5,000. Okay. The other important thing to mention here before I jump on over to talking about 2021 and how it's different, because actually you can get more than 5,000 per employee in 2021. You can get up to 14,000 per employee in 2021. But an important thing to say here is you do need to exclude any amounts you paid with PPP. And that is going to be a pain in the you-know-what. I'm just telling you with this calculation, it's going to be a pain because technically you do need to exclude any wages that were paid with PPP. A lot of people don't necessarily know and haven't done that kind of thing to figure out like how much do they pay each specific employee with PPP. You kind of need to figure that out to do this calculation accurately. So that's why I do say this can be a really great starting point to figure out, do I qualify, and roundabout how much should I qualify for? And then I do recommend working with an accountant, and I also recommend working with your payroll provider to like kind of get this tight, right? Like to figure it out really specifically to you and to make sure that you did all these calculations correctly. But this spreadsheet can really be used to figure out if this even applies and is something that you should go after. So that's what it's going to do. It's going to kind of max it out for you and estimate your total tax credit. And then it's going to tell you, okay, for 2020, you should expect to be able to retroactively go back and claim and get X amount in tax credits. And remember, when I say tax credit, that means money back in your pocket. That's straight up. If you get a $5,000 tax credit, they're going to refund you $5,000. Straight up. Okay. Let's see. So I did talk about this. This will help. It's both. This is why it's confusing. It's both. And that's why I have this decision tree here, because it does talk about the best thing to qualify for is the 50% loss. You're going to get more deduction. If you don't qualify for the 50% loss, you may still qualify if you have a partial or full closure. However, it also depends on how many employees you have, whether you're above or below that 100 threshold. So use this. This will make it much easier to kind of figure out where you fall on that. And that's why ERTC is hard. It's really hard to quote very specific, here's who qualifies, because you kind of have to go through this whole process to figure out where you fall on the spectrum. And then again, like I said, they change it in 2021. I don't know why I just took that off the screen. Let's see. And this is an important point, Mark. So yes. So I'm going to come back. So yes, for PPP, if you have not applied for forgiveness yet, this kind of changes the common, and this is another reason to work with an accountant to maximize what you can get. This is another one of those things that changes kind of common understanding. Previously, we always said, the easiest thing to do on your PPP is just claim it all. If you have enough payroll, right? Claim it all as payroll paid, because that's easier. You don't have to provide lease agreements, all this. Well, now for loans under 150K, they've taken away a lot of those extra documentation and support you need to do. And Actually, it may be better if you have enough other expenses. And remember now, PPP can be used for a lot more expenses. If you've got enough other expenses to cover that 40% of your loan, it may actually be better for you, potentially from an ERTC perspective, to only claim that 60% as payroll, right? And leave the rest that you can actually claim against ERTC. That is something you have got to work with somebody on, because it is complicated, but it can save thousands of dollars to go through that process, depending on how many employees you have. But before you even worry about any of that, download my $7 spreadsheet and see if it even matters, because it may not matter. You may not qualify. It may not be worth your time to worry about. So before you go and engage an accountant, do this. And then if you're like, ooh, there's some opportunity here, then go find an accountant to work with and make sure you do it correctly and you optimize it and get the most you possibly can. EIDL grant is not included in gross receipts at all in here. Doesn't have any impact. Let's see. Let's see. Okay. So I'm going to get back to... So only wages paid while employees were not working. No. So again, that's not, it depends. That's true if you have over 100 employees. If you have less than 100 employees, it's all the wages. So I need y'all to download my spreadsheet so that you can see the exact walk through the chart to figure out the answer there. There's no blanket answer. If somebody else tells you, oh, it only applies if you were shut down, maybe that's true for their business, but it might not be true for yours. Yes, right? Use PPP to pay rents and utilities, so you have more money for payroll to claim a tax credit against. This is important. And this is something that most people are going to miss. So if you're here watching this, I'm glad you are. Okay. All right. Yes. Available for owner and family employees. They were previously not allowed. I don't think so. I don't believe so. I think that this is still actual non-related W-2 employees. Let's see. If you're paying FICA taxes on them, yes, they do, which you should be. So, okay. So I'm going to go to 2021 because, like I said, you can max out at $5,000 per employee. I'm just noticing. I got to call it out. I'm going to go find out. Somebody gave me a mad face on this live. Somebody is angry. I don't know if they're angry about my $7 worksheet. I've never charged a thing for my worksheets. I was nervous to charge $7, y'all, but I feel like it's worth it, right? It's worth it. This thing was a lot of work. Okay, let's see. Maybe they didn't mean to do the bad face. Maybe it was an accidental. It was meant to be the heart or maybe a hug, and I got a mad face. Okay, we're going to talk about 2021. Okay, so for 2021, this is where you could actually get up to $14,000 per employee, you guys, $7,000 per quarter. It's only Q1 and Q2. So you're only going to look at gross receipts in Q1 and Q2 unless they extend it. Hopefully they don't, because if they don't extend it, that means that hopefully life is back to some semblance of normal and we don't need it. But right now it's Q1 and Q2. So let's go to 2021. Okay, you guys are so sweet. I love y'all. Y'all are awesome. Okay, 2021 ERTC eligibility. Same thing. We're gonna start with, do you have 500 or fewer? If you don't even look at the rest of this. You're not eligible. Sorry. We're gross receipts for so here's where it gets different. And this is where like the way that they've switched around the terminology and why you want to get this spreadsheet so that you can actually calculate this out a little easier. If you're having trouble conceptualizing it, just grab the spreadsheet. Were gross receipts for Q1 or Q2 2021 less than 80% of gross receipts for the same calendar quarter? So remember, last year it was less than 50%. So to qualify, you had to be under 50%. For the first quarter you qualified. And then after the quarter you were back above 80%, then you no longer qualified. Now it's where gross receipts for Q1 or Q2 less than 80% for the same calendar quarter of 2019. So we don't go back to 2020. Now we're skipping back 2 years. So we're looking at Q1 2021 versus Q1 of 2019, y'all. Okay. That's what we're looking at. So if you've had more than a 20% decline or more, i.e. gross receipts is 80% or less from what it was in 2019. Again, it's hard to switch back and forth between that vernacular. Then you are going to qualify. So it's not 50% anymore. Now it's 80%. And oh, by the way, now you can qualify for up to $7,000 per employee per quarter. Because what they're going to do is take 70% of qualifying wages up to $10,000. So whereas last year for the full year, you could get up to $5,000 per employee. Great. I mean, I'm not going to turn it down, but this year you can get $7,000 per employee per quarter. So that's a max $14,000 if you qualify, right? Right. So no, Q1 2019 doesn't count, but you're going to compare Q1 of 2021 versus Q1 of 2019 to determine if you meet this requirement. So let's go down the sad route that you do not. Now, actually, that's a happy route typically, because that means you're not down very much in your revenue. Awesome. But that also means we have to go back to that. Was your business fully or partially suspended? If it was, okay. Or if it wasn't, okay, you're not eligible. If it was, only the time period while you were suspended. I don't know as many, maybe there are certain places where there are businesses actually being shut down in 2021. I think this is less likely. 2020, there was more of that happening, but it's not impossible. So this caveat still exists, but you're not going to get a whole heck of a lot. It's not the same as if you can meet this requirement. So if we said, yep, we are down more than 80%, Q1 or Q2 of 2021 versus Q1 or Q2 of 2019. Remember, we're skipping back 2 years. Then qualified wages paid in that quarter that you're down, that 80%, are eligible. And again, you can't count wages you paid with PPP, but you can count wages you paid with PPP when you're determining whether you apply. You don't have to take those out of gross receipts or anything like that, or whether you qualify. But you do have to take them out when you're figuring out how much your tax credit can be. Okay, so that's an important thing. Oh, and I missed one caveat. Sorry, guys, on my own decision tree. So it was you're down 80%, or were gross receipts for the immediately preceding quarter less than 80% of gross receipts for the corresponding calendar quarter in here. So again, this goes to if you qualify in Q1, you're going to qualify in Q2 as well. And if this is confusing, don't worry. You just put your numbers in over here and it's going to tell you. So again, we're going to say, okay, in Q1, oh, I didn't even mean to put this up here. Sorry. In Q1 of 2021, let's say you had, 8,000, right? So we're down right at that 20%. So it's a qualifying quarter, and automatically we qualify next quarter regardless. We could go gangbusters. We could be like killing it in Q2 and still qualify. If you don't qualify in Q1, but let's say Q2 is not so good. Oops, hang on. This is giving me qualified quarter. Oh, that's because I meant 10,000. I need to be able to put in all the zeros. And then Q2 really tanks. Well, now you can qualify in Q2. You can actually qualify in Q2 even if you did, let's see, I'm trying to do some math in my head, right? So it's possible if you qualify in Q1, that means you also qualify in Q2. If you qualify in Q2, then you don't necessarily qualify in Q1. So that's kind of how the calculation works. And it's down 20%, meaning it gets confusing. You don't have to be down 80%. The 80%, when I talk about that, is how much your gross receipts were in comparison to the last time. So if you made 100 and you made 80, now you're down, it's 80%, right? But you've had a 20% decline. So that's why this is helpful to just kind of get rid of the vernacular issue. Okay. So if that's you, then we're going to figure out, yes, qualified wages paid. And then it's the same question. Now it's were average full-time employees greater than 500. Now, again, you probably aren't, if you made it this far, then you did something wrong if you have over 500, because technically you wouldn't make it this far. But similarly, wages paid to employees are eligible to be counted, otherwise not. So they changed that kind of threshold as well when it came to 2021. You go to jamietrell.com/ERTC. It does cost $7, but I think it's worth it. Let's see. I've got some questions in here on PPP. I'm not going to talk about that. I'm only talking about the employee retention credit. Today, I will be back on Friday talking about more specifically just PPP. Let's see. Just to clarify, we still qualify in 2021 if we had a 40% drop in gross revenue. Yes, compared to 2019. So Q1, and they are calendar quarters, so January through March. You can't pick three months. People were hoping to do that even with PPP. It's calendar quarters, January through March, April through June. Those are the 2 quarters in 2021. So unfortunately, if you were down in, February, March, and April, but not January, February, March, nothing I can do for you. Okay. So once you figure this out, let's just kind of come back to here. So you're going to go through these decision trees. You're going to put in your gross receipts. You're going to figure out, okay, I qualified in Q2 and Q3 of 2020 and in Q2 of 2019. Then you're going to come to this qualified wages tab and you're going to put in what you paid. You actually want to list each employee because it's capped on an employee basis. So you can actually put their names in here if you want to make that easier. Again, full-time and part-time can be included in here. The wages that you paid to each of those employees only during the quarters that you qualified, right? So Q2 and Q3, ignore the other columns. You're going to put that in. It's going to calculate out your total qualifying wages and your estimated tax credit. Same exact thing for 2021. You're going to put in the amounts that you paid. In this case, I'm going to skip Q1, right? Because I didn't qualify in Q1, but I did qualify in Q2. So I'm going to put all that information in there and it's going to estimate out my tax credit. Like I said, it is the qualifying wages for 2021 are up to $10,000 in qualifying wages. So in this case, and it's on a quarter by quarter basis. So that's part of the difference as well. So you'll see that it'll max out for you. So hopefully that makes sense. And then let's see, let's just test this out a minute. Yep. So it'll max out at 14,000. So your total qualifying wages will max out at 14,000. Is that right? Now I'm confusing myself, but the total max tax credit you can get is $7,000 per quarter. So it will max that out automatically for you on this spreadsheet. Okay, so this is then the question. So yeah, it does not qualify for self-employed. If you're self-employed, this is not going to qualify for you. This is just for our employers out there. If you're self-employed, though, you can get PPP even if you don't have employees. Okay, so that's my spreadsheet. You'll be able, again, there's directions in here that tell you what to do. And I can even send a link to this video as well, where you can rewatch what to do on this. But I'm going to come back to you guys and talk about how the heck to claim it. So yes, as of right now, we're still kind of waiting on if they're going to come out with more specialized instructions on how to claim this. But right now, the understanding is you can go back and amend your 941 just for the fourth quarter. You don't have to go back to every single quarter. You go back to the fourth quarter and you can amend it for the full year of 2020. And then you're going to claim this on your 941s going forward. So work with your payroll provider to make sure that this tax credit gets claimed appropriately in 2021. But you do have to go back and amend your 941 for 2020 if this applies to you. Yes, I'm curious to see. I think it's early. And so a lot of people have been saying, wait, we're waiting for more information. I don't know how much more information we're going to get. Even the IRS website is not updated for this stuff. So that's something to keep in mind when you're trying to figure out what's going on. So yes, and then you can use the 7,200 as well. You can use the 7,200. I believe you can get actually an upfront. So if you need the money up front, if you're like, I know I'm gonna qualify in Q2, but I need that money now, right? Or you don't want to wait for that tax credit to happen on your forms. Technically, you can file Form 7,200. Again, I would have an accountant help you with that, but there is a way to kind of estimate that out and get that money up front if you're in need of it now. definitely use an accountant. It is worth it. So yes, so you're gonna claim this on your 941s, but remember, it's actual money in your pocket. So that's what's so great about this. And again, we kind of ignored it because we couldn't get PPP and this. Now we can. Now we can. Let's see. Let's see. So I'm just looking for questions. New business in 2020, so no gross wage comparison, was partially closed, but still paid some wages to employees. Are they eligible for any credit? Probably for the time that you paid wages, if those employees were not working. So if you don't have the comparison and you can't meet that decline, you can't show that decline, I believe you would still be able to qualify for the wages while you were shut down and for only employees that were not working. That's kind of the key. Thank you. They're kind of running out. I got a sparkle nail, y'all. I don't know. It's probably very out of focus. That's the important thing right now to talk about, you guys, not the up to, $19,000 you can get. Okay. Hopefully this is helpful. Hopefully you can go grab the worksheet, jamietrell.com/ERTC. It will send an email to you that will include it so you can do your own calculations, figure out what quarters you might qualify for, figure out what qualified wages, what your estimated tax credit may be. And then if there is, if you follow kind of this flow chart, it'll help you kind of understand as well what you need to do. But like I said, I do, and I talk about the rules kind of in here. There's a summary. I'm pointing at this like you can see it, and I didn't have my screen shared, but I have like a summary of kind of the differences as well. So this is kind of a summary just to help understand. And if there are any changes, if anything new comes out, or if we find something that we're like, oh, that doesn't work quite right, we will send you a new spreadsheet automatically for those of you that purchase this. I have a free one. That one I should have charged for, y'all. I'd be in Tahiti right now, except I can't be in Tahiti. But anyway, that one I should have charged for. That one that we do have, it's jamietrell.com/PPP calculator. Bree, who's on here, helped with that as well. Also, my friend Kelly helped with that one. It does need to be updated a little bit for the new rules. So we may be pushing through some additional changes to that still, but for the most part, the calculations are broadly still applicable. It really is best though now, because you don't have to do, if you have under $50,000 loan, you don't need my spreadsheet, because now you don't need to do any of those calculations, the FTE requirements, none of it matters. You pay the money all to yourself. If your loan is over, and your employees, right? But if your loan is over 50,000, then the spreadsheet can still be helpful. Let's see. Okay, guys. Oh, I'm seeing y'all making purchases. Cool. I'm like, what keeps popping up on my computer? Okay. Let's see. I'm looking to see, but we need to calculations for this. Yes, you need to do the calculations to see if it's going to work first. So that's why I wanted to kind of walk through this with you. If you don't qualify, no need to spend your money sitting down with a CPA on it. Okay, guys. So, and just to mention on this spreadsheet too, we did make a version that opens in Google Sheets and one that opens in Excel, and it should also work in numbers. But let me know. We haven't tested numbers, but it should work. Let me know if you have any issues if you're working on a Mac and you use numbers. But there is a specific version just for Google Sheets and a specific version just for Excel that you will get when you download it. Okay, so that is my ERTC. Somehow I made one of the most complicated topics into less than 45 minutes. And I'm pretty dang proud of that, because this is I was resentful about this yesterday, y'all. I don't know how much coffee I drank. It was a lot. This is not fun for even me. So if you're like, this is awful, yeah, it is, but it can save you money. So, okay. I think you guys are awesome, and I will talk to you soon. I'll be back on Friday for just my normal Q&A that I do every single Friday at 1:30 Central Time. So if you have questions about PPP, more questions about ERTC, or anything else, come on over to the live on Friday, and I will see you guys there. Bye, guys.